Hi everyone, this is macro option trader Yahoo, and today is February 4th, 2026, around 9:40 a.m. Japan time. Let's start with in the Nikkei Ninigo. Yesterday, the Nikkei closed at 54721 yen, which means we update the highest closing price on record. We are still in a range market, but within the range, we clearly push through the upper end. It does not look like a clean breakout yet, and right now the index is trading around 54140 m, so slightly lower than the close. But really stands out is trading volume. Turnover stocks reach about 2700 stocks, and we are starting to see consecutive days that could eventually exceed 5 trillion yen. That tells me the market is still very optimistic. Because of that high price environment, the volatility index remains elevated. It's currently around 335.8, and it has stayed above 30 since January 23. So even though prices are high, the market is clearly pricing this as uncertainty. Valuation wise, the PER is about 20.2. Nikkei EPS is 2704 yen, which is also historical high. Looking at rate, Japan 13-year JGB is around 3.62%, basically unchanged. USD JPY is back around 155 level. We saw bubble intervention when it touched 152, but the yen has weakened again. So in yen terms, Japanese equities are still sitting at high levels. Now let's look at the US market. The S&P is at around 6918 points. It briefly tried to approach 7000 point, but got pushed back. Compared to Japan, US momentum feels noticeably weaker. The VIX is around 1.8, and the US 30-year yield is about 4.9%, and the moving index is near 5.7. No dramatic changes there. What I'm really watching closely is gold. Gold's briefly touched the $5500 level intraday on January 29. But yesterday it pulled back to around $4939. So we have seen a clear correction. Gold volatility GBZ peaked at 46 on January 29. It's now hovering in the low 14 after dipping into the high setting. And there's chance that gold volatility has already peaked it, and that's something we need to monitor carefully. Now, Bitcoin is down to around $75000. The last time I recorded, it was closer to $8900. So both gold and the so-called digital gold Bitcoin appear to have passed the peak. Bitcoin earlier, gold more recently. At the same time, Japanese equities remain strong, while the US market looks weak, and that mismatch feels uncomfortable. If I had to summarize them, put type asset were being accumulated, and gold has the clearest example. Now gold seems to be rolling over, while equities are still holding high level. The combination requires caution. In Japan, the rally since last year has created sick unrealized gains. Those gains are slowly being compressed by time. The key question is, when does the compression turn hostile? And that's something I'm monitoring closely. Volatility is high, gold was high, and now gold is starting to fall. This is not a moment to relax. One more thing I'm personally watching the Nipah virus. There have been reports out of India about a virus with a very high fatality rates. Its transmissibility may not be extreme, but uh, lethality is concerning. If a pandemic were to occur, it would be the first major one since 2020. Image a scenario where a large international sporting event in Italian Olympic becomes a global transmission point. That's not base case, but it's a risk scenario worth imagining. Nipah fatality rate can reach up to 75%, and the incubation period can be over a month. That makes detection extremely difficult. During COVID, central banks have room to cut rates, and inflation was not a constraint. And today, it's very different. Inflation is high, central bank want to stay tight, and we are already in supply constrained world. If a highly lethal pandemic occurred under these conditions, global logistics could break down. That could push us toward a truly fragmented and decentralized global economy. Uh, Seen from that angle, the timing of Japan's general election in February is interesting. Finishing elections before major global events may reflect a desire to remove political uncertainty early. So again, equity is high, and volatility is high, fear is growing a balance on the surface, and yet the stock market keeps pressing high. That's divergence deserves respect. I'll continue to monitor the market through my own models and issue alert when necessary. Thank you for listening, and please follow my contents with a long-term mindset. See you tomorrow.